Here we have key reversals and again bearish live cattle futures using a 60-minute time frame. Now, as we can see, we are in a clear downtrend, making lower highs and lower lows with good selling quality bars. Down bar, down bar, down bar, down bar, down bar. Note the volume. The volume is good. So we have selling of good quality as we break structure. We have valid breaks. Okay, so we know the market is weak. And then we rally, which ends with bar A, our key reversal bar. Now, this rally here is not overtly weak. You know, volume does slightly increase, but, and it is a big but, we need to compare the selling to the buying. And we've already noted just previously that the selling has all the volume, the down bars have all the volume whilst breaking structure. So the selling is of better quality than the buying, and that's important. Okay, that's important to note. However, we must look at the overt weakness that is bar A. It pops its head above local price action to reverse and close weak, and we are moving up. So this is a lovely key reversal bar. We are reversing in this area of congestion here. I mean, this is not an upthrust. Okay, we don't make it. This is a clear, clean key reversal. We're pushing up. We do get some volume, but this volume is nothing, as I previously said, compared to the down bars. So when we see this negativity A, it pops up, reverses down, closes weak, we short. Our first target would be down here at support. Okay. However, there is much more to this chart. Now, back up now. If we look at B, we can see again this is a key reversal, or is it hidden up thrust? Because we could draw this level here again, hidden up thrust, key reversal, because we are pushing up. Okay, label unimportant. It's all of the above, really. It's weakness. Okay, it's a form of negativity. It pops its head above local price action to reverse and close weak under the past two previous bars. Now, when we add structure, now B becomes an extremely high odds trade. Why? We have a triple confluence. We have, if you remember back to our first session of structure, we have a triple confluence. We have resistance from here, we have our local resistance and the supply line. And look at how price has reacted. We pop up above all these. So buyers manage to drive it up and then bang, they slam it down with a wide spread. So that means we have ease of movement. But not only that, what else can you notice about B and why is it a high odds trade? Excellent. Yes, the bar before is effort versus result. Look at this volume is slightly higher than B, yet look at this spread. Look at that spread to this volume. So the spread is exactly the same with almost triple the volume. So this bar here is actually loaded with hidden selling. After, and then straight after, we have B, which drives up and then reverses to close weak. This is an extremely high odds trade. Now again, there is a lot more to this, to B. What else does B do? It tests the high volume at A. Now A is high volume, and we did have a slight rally. Okay, so don't forget that buyers were they weren't in control because, you know, we weren't breaking highs or doing anything significant, but they managed to, and then come down, and that is high volume. So before they want to move it down for markdown, they need to make sure that there's no more buying in this high volume bar. So they push it up, find no further buying, and bang, we get ease of movement to the downside, closing under this price action with a triple confluence. Okay, just making sure there's no more demand present in bar A. So bar B is a complete setup with no ambiguity. There's weakness in the background. We're in a downtrend with good quality selling, breaking structure with pops in volume. What's that? Validity. Okay, we have the negativity via A, and we get the price action at B with the effort versus result in a triple confluence area. I cannot stress to you how powerful, how strong, or how can I word this, the odds of success of trade B working are much higher than A. A, it's overt price action, okay, but B, this is the best trade, okay. But this is a key reversal, and this is a hidden up thrust, key reversal. It's all of them. It's weakness. But when we incorporate structure, we always get that edge. Good. So this finishes our work on key reversals. Let me just try and sum this up. Oh, before we begin, suffice to say that we can reverse the use of key reversal bars. They are the exact opposite of each other. What do I mean by this? Sorry, by any insights that we have gained, or you may have gained through the different studies, being both bullish and bearish, we can reverse the thinking. You know, we can simply apply the thinking in reverse. Hidden tests or key reversals are very similar in nature, and I always stress that the labeling is unimportant. It's to understand the behavior that is the real key, either the strength or weakness associated with the current price action, and does it concur with our background conditions, our context. For example, our price action here is of effort versus result, and our up thrust, our key reversal bar, okay, and our background conditions is negative. We're coming down, we're in a downtrend, we have widespread down bars breaking structure, and we have a lovely key reversal bar at A. So our background conditions are contextually correct. That's very, very important to understand. So from a personal standpoint and the markets I trade, key reversals are rarely used. And this is where the intimate knowledge of your instrument comes into play. Each and every market has its own personality and likes to display certain principles or concepts more than others, especially with stocks, as these can be heavily manipulated by larger interests. Now think about this. Each larger interest will be a group of traders with different personalities. Hence, the way it moves and manipulated will be slightly different. How can I put this? The orchestrators have preferred techniques of how they like to obtain the retail traders' contracts. That's something to think about. Let me expand on that. I mean, what do I mean by this? I mean, every contract or instrument has its own personality, and some of our principles and concepts work better on different contracts. Example, crude oil loves a shakeout. Crude oil, for some reason, will love to shake out, and we will have large, widespread down bars or an upside shakeout. Okay, and if we are aware of this action and we're in position, it's less likely to spook us out of the market if we're in position. Okay, very, very, very important information that we can gain by knowing the personality, so we can be prepared. Again, so when a shakeout does appear, we're not spooked out of our positions or the market early. And what else? What else have I noticed? Like currency contracts, you know, 6E, pound, euro. they do not like key reversals or hidden tests, but they do like to up thrusts. And gold, oh yeah, whereas gold, contract GC, they love hidden up thrusts. I mean, recently, hidden up thrusts is where you have price action like this, and it'll pop up and then come down, and then we come down. Okay. I think I've been doing 12 on gold, 10 of them have been hidden up thrusts. Whereas on crude oil, I don't think I've traded one hidden up for 4 weeks. And that's the case in point. We need to be aware of the contract, the personality of the trading involved, the orchestrators, and what we can pick up on what we like to trade. There's that melting point by the orchestrators, the price action, the concepts and principles that you like to use, and which are what are displayed in the contract or stock, ETF, whatever instrument that you're using. After all, it is the larger interest or the group of collective people that we are trading against. And all these larger interests, they like to manipulate in different ways. So all we have to do is just align the manipulation that we like to see with our own style of trading. I know this may sound very complicated or far out, but the higher skill level you become as a trader, and the more you know your own trades, your own setups and concepts and principles you like, you will have certain instruments that you prefer to trade because they display the characteristics that you like to trade, and that become very apparent. And like I said, hidden up thrusts on gold are very, at this moment in time. Obviously, market conditions change all the time, and that's part of our job as a trader, is to adapt. But they do display different characteristics. Okay, enough of the rant. So, with hidden tests and up thrusts and key reversals, regardless, we can use them in the correct context, which are usually trending conditions, and structure to lean against, our odds of success dramatically increase with these tests as set up. You see here, like bar A, this is a very good trade from price action alone, but we don't really have structure to work with. Okay, it's kind of in the middle of a mini trading range. It's not overt. It's a trade with definitely tape because we're playing the high volume and we can read this weakness and we can read that the poor quality buying in comparison to the selling. However, B, where we have structure team against a triple confluence, and we have this additional weakness in the background, this is a high odds trade as we are leaning against structure. Good. Excellent. This concludes our key reversal sessions. On to the next subject.